Good morning and welcome back to Almus Market Mornings. While markets are waiting for a broader deal with a lot of optimism, the fears of fragility of the ceasefire slightly bogged down on the sentiment. But I would say the optimism of a deal coming through is still far higher. We don't know how yesterday's strikes will be perceived, whether it's a violation of the ceasefire or not, but oil prices did inch up on the news of the attack, and the rupee, which had a 3 day strong streak, quickly weakened. Good morning, JK. What are you perceiving out of this particular situation?
Yeah, good morning, Suraj. It's not just yesterday's event where U.S. forces bombed some regions in southern Iran, which is stated to be self-defense. Also, there are quite a few stumbling blocks for the peace agreement to be, achieved. Negotiators are still trying to determine whether the proposal coming from Iran is actually reflecting the approval of the supreme leader and also the hardliners, rather than just the pragmatic fraction represented by Foreign Minister or Aragchi. And we have always stated that with so many factions in Iran and having radical to moderate views, it's very difficult to see whether there is a consensus, and if there is any deal, that has to have some amount of common alignment, without which it is, setbacks are bound to be there. Even Trump's apparent softening on demands for Iran to surrender enriched uranium, perhaps shifting uh, toward destruction or third country transfer, has done little to narrow this trust gap. So the latest military exchange reinforces how fragile this diplomatic track remains and how quickly escalation risks also can emerge. Also, Iran has about 100 billion of its dollars. It's frozen by US due to their sanctions, and now they are seeking release of about 24 billion of those funds. And again, unless US yields to that, the things cannot move forward. So this is the context in which Marco Rubio also said that deal with Iran to halt the conflict can take a few days. So that few days is something we have to um, guess about what it actually means. So markets are again back to slight negative reaction. Oil going up, and bond yields also slightly rising. Uh, Currency has become slightly neutral, and stocks have actually been rising amid all these tensions. Of course, in pockets. I wouldn't say all across. It's mostly in the AI related markets, mainly in the US, and then, of course, Taiwan and Korea as well. Other markets are slightly weaker. Now, particularly in case of currency, we're seeing ranges in the dollar index itself has been narrowing substantially. In the last 2 weeks, it has moved in just a 0.5% range. And similarly, in gold and silver also, the average true range every day, which is one of the technical that we follow, has narrowed down substantially. And silver, which used to have, at the peak, average of around 25,000 per day movement. Now it's down to around 7,000 to 8,000 average true range. It's not just single days. So the volatility has dropped substantially in the dollar as well as in the precious metals. Of course, there could be several aspects of the market is waiting. One is the resolution to the Iran war, and then, of course, the monetary policy, how the bond markets are going to react. And these are keeping things very quiet. Of course, when we do have some larger trigger from any of these issues, we can see a sudden burst of volatility. That's what currently markets better to be in a neutral state and then see how things go on. And speaking of bond market, there was a small relief early this week on the peace talks are progressing, but that seems to be getting a setback again. See, beyond the war, bond market is also increasingly focusing on the unsustainability of fiscal position of major countries and how a rise in yields can push them to a corner, because the room for fiscal maneuvering has actually been evaporating. The higher borrowing costs feed directly into their interest costs for servicing the huge debt. So the fiscal vulnerability has awoken the long dormant bond vigilantes, what they call as the people who attack the bond prices because of their overpricing in the face of higher fiscal spending as well as the higher debt. So we are already seeing some action from them, and of course, it has gone into a slight calmness, but it can arise once again. Particularly if you look at the sovereign debt markets of UK, Japan, and the US. So my conclusion is that even if we do see a peace deal in the war, bond market rally can be very short-lived, and a fresh bond market turbulence can emerge, threatening broader financial market stability as well. That is something that we should look forward to in this year. As far as the rupee is concerned, the recent strength was helped by quite a few factors working together. RBI's massive intervention, indications of more policy measures, and also improved chances of the peace deal. Oil fell below 100 and it came lower, improving the risk sentiment. However, this with the peace process receiving a setback, and thinking that is emerging that it could take much longer. Again, the rupee has become attractive, or rather, the dollar rupee has become attractive for importers at low 95s, and we also had a couple of good technical points. The 20-day moving average as well as the trend lines. So these are some technical points that the trend watchers watch, and the moment they see some support emerging there, they get into action. That's what we saw in the yesterday's trading, and obviously the global trigger also worked towards it. So we saw hordes of importers coming into the market yesterday. Even the PSU oil companies were buying, and 95.50 breaking also brought in some stop losses. Now, what happens is when after falling by about 2% and giving some sense of stability returning, if there is a sharp bounce like this, once again the sellers go away, and people who have been on the sidelines for some time will also come in. So I think we can see probably even 96 being tested again, the retracement. But if it is allowed without much intervention or any other measure, I think again market will perceive it as rupee becoming still remaining vulnerable, and there can be some attacks on the upside as well. So what RBI does, and how the global situation evolves, both these things are very important for the rupee's stability, and it doesn't take too much, as we have seen, for the rupee to retest the previous highs. Thank you.
Thank you, JK. And yes, we started the week on a quite a positive note, but it seems, JK, have you noticed this that for the past like few sessions, few weeks, I would say, we always start the week quite optimistic, and then in the midst of the week there is something like this, and that sort of turns things sour. You have
Yeah,
this
it
observation?
does. Yes,
Yeah,
it does. And
yeah.
there's some go even to the extent of suggesting that these headlines are created to see the oil market swings. There
Hmm.
are larger forces who want higher oil prices as well,
Right,
and obviously US and other countries who are facing higher inflation, they want the prices lower. So
right.
some amount of influence from the market players is not ruled out
Is
also.
not rolled out
Yeah,
yet. Yeah,
yeah.
absolutely. So there you have it, folks. There is some sort of a pattern over here in terms of the statements we keep saying. So broadly now, again, you had a bit of a military exchange in the last 2 days, and that sort of keeping things fragile. And moreover, whether the peace agreement is broadly accepted in Iran, because as we know, there are a lot of factions there. Supreme leader is there, the hardliners are there, Agachi is slightly more liberal. So, I mean, I think that would be a cause of concern for those who are negotiating. So that's something sticky. Broadly, since the time this has sort of soared, we are seeing USD INR bounce back up higher, oil is higher, yields are higher. Yesterday we broke 95 half on USD INR, and it looks like 96 is likely to be tested today. That's it from us today. Thank you for listening. We will catch up again tomorrow with a fresh round of updates.